In this video, I'm going to show you a members video for which I sent today talking about my new poor man's cover call trade on LABU. If you've been watching, you may know I already have an LABU trade. We have 7 contracts expiring next week. We definitely have a plan, and in this video, I'm going to show you what I showed the members. And I put on a brand new trade. I'll tell you what, being a member gives you access to all my trades. I'm in retirement. I retired when I was 55, and this is what I live on. I'm going to show you that I trade stocks and ETFs. We write covered calls, sell cash, secure puts, and then we take that profit and we buy dividend-paying funds. I'm going to show you my weekly dividend income. But what I do is I write covered calls and sell cash, secure puts to generate all that money you see on screen. LABU itself, just using the poor man's covered call, we've generated $12,527. Most traders on YouTube don't even make $12,527 the whole year. We're using LABU and making that. And at the bottom, you see the 2 trades that are active and live right now. Look, we have no fear because we know the trade, we understand the trade, and then we execute the trade with our knowledge, with our confidence, and experience. And hey, look, at the end of the day, all the members see my trades. So that's what we're going to talk about here in a moment. I'm showing the members exactly how I'm executing these trades. Now, real quick, let's talk about my dividend income. I have the dividend tree. A lot of people out there love the idea where we use the golden goose of investing, cover call writing, cash secure put selling, and then we buy dividend paying funds. See, when you work the 9 to 5, you have to share the 9 to 5 with your family. If you're going to buy dividend-paying funds to have dividend income, you have to take it away from your 9 to 5, right? You have to take away money from a family dinner, a vacation, or something. But when you learn cover call writing and cash secure put selling, you now have created money. Where I didn't have money before, I have money now. And they're all profits, and we buy dividend-paying funds. This is my dividend tree, and I have multiple dividend trees generating over $4,000 a week on average, knocking it down. And I'm so confident that we're on margin as well, using margin for dividend income. I wrote the smart guide to using margin for dividend income. It's absolutely working perfect. And being a member, you have access to the guide, the calculator, and all my members' videos talking about using margin for dividend income. It's incredible. $4,000 a week on average? Absolutely knocking it down. Now look, this is what the members get. You get the phone app entry. First of all, you get an email, but you get a phone app entry for which you can click on the trade. It takes you to the trade details. Every member sees every trade. I think I've already done this year, it's literally June 14th, I've already done 250 trades for the members. 250 trades for the members to follow if they want to take the trade. But I'll tell you what, I do the trade because I got to fund my retirement. And oh, by the way, I trade my kids' accounts, so I have to be on it because I can't lose my kids' money. Hey, look, whatever I do with mine, it is what it is, but I can't lose my kids' money. They entrust me to do that for them. And by the way, they have a dividend tree. My one son makes $1,000 a month, knocking it down, passive income, using covered calls, cash secure puts, taking the profits, buying the dividend fund for his dividend trees. And I'll tell you what, they are going to have a dividend grove, paying them weekly, passive income. I'm going to turn it over to him. This is a members video for which we talk about LABU, the 3X Leverage ETF to the Biotechs. It's leverage on top of leverage, but it is diversified, and we're using it to sell premium. And in this case, we're using the poor man's covered call. So I'm going to turn it over to him. Stick around. I know you're going to like this one. One free month offer in the description below. Would love to welcome you aboard. Hey, welcome back, everyone. You know, I thought about this and I had to chuckle myself. I said to myself, I'm going to do a quick video on my LABU poor man's covered call trade. When have I ever done a quick video on any poor man's covered call trade? And I think some of you are giggling. You know, this is a complicated trade. But once you're in the trade, it's nothing more than writing covered calls, and I would suggest it's out of the money covered calls. It's because when we write covered calls with leveraged ETFs, we're going to pay a lot of time value premium when we buy that LEAPS call option. This is why I would absolutely love to dig in to how the YieldMax traders will create a simulated trade using a call and a put to mimic stock movement versus us using the poor man's covered call, where we have to buy a LEAPS call option, which always has tons of time value premium, which is the cost of the trade. Because remember, when I buy that LEAPS call option, that call seller has to hold those shares for the duration. So they're getting a lot of time paid to them. And because this is a 3x leveraged ETF, well, they're getting a lot of time value premium. So they buy the shares and write a covered call that might be 6 months out. They're going to collect 5 to 8% sometimes. And hey, that's kind of an easy trade, right? Well, time value premium is the most expensive part of the poor man's covered call. In this case, I'm going to show you the trade I did yesterday where I went ahead and I bought 3 LEAPS call options to support LABU trade. Now, real quick, I have another poor man's covered call trade on LABU, but it expires this Friday. June 20th are the expiration dates of my LEAPS call options. Now, some might say, why don't you roll these? I'm not going to roll my LEAPS call options here, although I could actually sell these because I don't want to be assigned the shares, right? I would sell these, and right now I'd sell them at a loss. Now, I'd write that loss down when I bought the new LEAPS call options to support this trade that you see right here. I would take that loss and add it to my new LEAPS call options that I purchase. So say I buy the new LEAPS call options. Well, I'm already in debit because this current trade that's closing this week will have lost money on the LEAPS call options. What I'm going to do is try to get out of this trade, probably losing money on those LEAPS call options. But because I've written so many covered calls and my last covered call being $1,800 for 1 week, well, I think we're going to get out profitable. We'll see. This market tanks, that's not going to be the case, and I might have to roll it. But let's talk about the new trade, because the new trade is one that I just went out and bought 3 LEAPS call options, and I'm going to break this down. Using the September strike this year, it's basically 100 days. So we're going to try to use these LEAPS call options for the next 100 days to make this a profitable trade. When we set up any trade, we always use the initial trade setup. You absolutely have to, because you have to understand what your time value premium cost. And the reason I'm showing you this trade is because unbelievably, for this trade, it's the September 19th, 2025, the stock was trading as such. When it was trading at 59.28, I selected the 28 strike. That turns out to be the 95 delta leap, which is very important because remember, our LEAPS call option will move 95% based on a $1 move in the stock. So as the stock moves $1, this LEAPS call option that I purchase is going to move 95% of a $1 move or 95 cents. But what is that time value premium that I have to pay the call seller? Because I'm buying the right but not the obligation. To buy his shares at 28, I paid him $31.80, which turns out to be incredible 0.88%. Think of that for a moment. 0.88%, a 95 delta leap on most any stock will be more than 1%. We literally timed it perfectly where the stock was trading, where I bought in, what I paid, and there it is. We paid the call seller 52 cents per share to have the right, but not the obligation to buy his shares at 28, and I basically have 3 months. So now the trade is on. I have these 3 LEAPS call options in my possession. I now have the ability to write near-term covered calls using the poor man's covered call strategy, which means I can write covered calls as if I own the shares. So that's what we're going to do, and that's what I do. Right away, we initiate this trade. We do not wait. So when the stock was trading right at 59.61, the stock actually had moved higher while I'm preparing for this trade. We go ahead and write the 62 strike, and I'm really feeling it. I'm feeling good because I didn't even pay 1% for these LEAPS call options. I can literally get off a 1 week trade. Usually you can't do this. Usually what you do is you write a covered call for 30 days so you can max out the stock movement, plus you get some premium. That's how we want to do a poor man's covered call, because we pay so much in time value premium up front to the call seller. It doesn't make sense to do a 1 week trade. You want that to be a 30-day trade so you can pay back the time value portion to the call seller, and then we make that juicy cover call premium, not using as much money. Right? If I were going to take on 100 shares or 1,000 shares of LABU, I'd have to pony up some $58,000. In this case, I would have only had to pony up $31,000. Now, we didn't do that, but that's how this works. It's why they call it the poor man's covered call. We're actually writing a covered call, but we didn't spend as much upfront money. Now, some people like to use lesser priced stocks and ETFs because when they buy the 95 Delta Leap or whatever Leap's call option they buy, they're only spending like half or maybe even less to get into this trade, but make real covered call income as if you own all the shares. Well, this is fabulous. I only did 3 contracts, which means I have control of 300 shares. The reason I did that is because I want to get out of the other LABU trade, get that cash, and consider loading up on this new trade. I don't want to overreach, although it seems incredibly inexpensive for this trade. I probably should have done more, but we're going to go with the 3. We are going to stay in our own lane. So what we do is we do dial up that poor man's covered call, and sure enough, we get $1.85 for literally 5.5 trading days. We do this Friday, which gives us a little bit of time value premium on this side of the week for next week. I always love using that strategy because remember, we are selling time. That's what we do. We use various stocks and ETFs. Those are tools in our toolkit. The stocks and ETFs. Then we go out and go to work. We build the fence. And basically, the stocks and ETFs are the tools for which we build that fence. So LABU is going to be used here for this poor man's covered call trade. I have till September. That's about 3 months. We're going to go ahead right off the bat because my time value premium on the options I bought is so low, I'm able to make that back within the first trade. Now, LABU could sell off, and if it does, then I'll buy this option back, and then we'll go back to the old plan of doing a 30-day trade and what we're looking to do and use time to our advantage. Because right now it's very short. We're going to enter time decay immediately on Monday. So this 185 option will dwindle if this thing does not go higher towards my strike of 62. If it goes the other way when we wake up Monday, then this option of 185 will quickly find itself where I could buy this back for a heck of a profit. But we'll see how it goes. If I have my shares taken away, if LABU gets on its horse and it goes above 62, which it could, you know what I'm going to do next. I'm always going to run the calculators for the buyback, and as this thing goes higher, $1, my Leaps call option trails it by a nickel. Now, I don't suspect in the week that this thing is going to rocket such that I'm going to lose money. But do understand, this nickel we're talking about, it's going to come out of my covered call premiums when I close this trade. So, the reason I'm in this new poor man's covered call trade with LABU, and I did not roll this one yet, we're going to see how this one plays out, because as you can see, if this trade closes where I have my shares taken away, this will be a nice $3,000 profit. Literally 2 weeks ago, I was down $7,000. LABU bails me out. It's incredible. I'll take it. I'm not too proud. We feel comfortable with LABU. We feel comfortable that it's trading maybe in a range where it could be higher, it could be lower. We're going to milk the middle. And every single time this thing falls, we'll buy back these options, write a 30-day, get that premium, and as it moves higher, sideways, lower, we'll buy back, repeat, rinse, and hopefully when this trade ends, the stock will be trading in and around 58, and our Leaps call option will probably be trading in and around 31.80, which was my cost, and we'll have all these cover call premiums to just stack, close the trade for another poor man's cover call win. If you have any questions about the poor man's cover call, I have tons of videos. I'm going to be setting up an area at the Download Hub, just like I have with the using margin for dividend investing and the in the money covered call. If you go to the Download Hub today, I have sections for those two strategies. I'm building more and more sections to try to narrow the search for good information from me on the Download Hub. Of course, you could always peruse all the members-only videos in the phone app. And of course, any poor man's covered call trade you're interested in, go to the download blog. In the search, type the letters PMCC, and you'll see poor man covered call trades. And finally, lastly, anytime you're looking for this trade, the trade I just did, always find the UT number. The UT number makes this trade unique, and you can search this number on the website and you'll see this trade. If you want to do this trade, you would do or follow this trade, and then you're looking for when I close the trade. Well, you can search the UT number and you'll see both the open and the close. In emails, those numbers are very clear, always searchable. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.